Ladies and gentlemen, good day and welcome to the Q2 FY24 results conference call of Silicon Rental Solutions Limited, hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Kaushal Shinde from Kirin Advisors. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to Silicon Rental Solutions Limited Q2 FY24 con call. From the management side, we have Mr. Sanjay Harish Motiani, the Chairman and the Managing Director, and Mr. Nikhil Sanjay Motiani, Director. Now, I will hand over the call to Mr. Nikhil Sanjay Motiani. Over to you, sir.
Thank you so much, Mr. Kaushal. I would like to begin by welcoming you all. Ladies and gentlemen, a warm welcome to our inaugural conference call as we come together to discuss the financial performance of Silicon Rental Solutions Limited for the first half of fiscal year 2024. I'm honored to address you all. Before we delve into the specifics of H1 FY24, let me offer a brief overview of our company and its business model. Silicon Rental Solutions Limited, a pioneering name in the Indian IT rental sector since its establishment in 1993, initially focused on the sale and service of IT equipment. Over the years, our company has evolved and broadened its services while maintaining an unwavering commitment to customizing rental schemes that provide undeniable advantages to our clients. Our registered headquarters is in Mumbai, with branch offices in Pune, New Delhi, and Kolkata. In 2021, we proudly achieved recognition as India's first ISO 9001:2015 certified IT rental company. We take pride in being a one-stop destination for all IT rental needs. Our extensive product portfolio is designed to adapt to the ever-changing demands of our clients, ensuring that business thrives with optimal efficiency and performance. We offer desktops, laptops, printers, servers, CCTV security, networking gear, projectors, and various IT hardware and peripherals. We source the majority of our products from major brands like HP, Dell, Lenovo, Apple, Asus, Intel, AMD, Gigabyte, SonicWall, D-Link, Cisco, and others. We consistently enhance our offerings, cementing our position as a trusted partner with a skilled team of engineers dedicated to equipment support and maintenance. We promise to schedule visits within 24 to 48 hours, aligning with the client's specified turnaround time. Our rental solutions range from as short as 1 day to as long as 36 months, offering benefits such as 24/7 support service, rapid support, no capital investment, zero cost repairs, hassle-free maintenance, and convenient-free upgrades. Some of our notable clients include Tata Group companies, Reliance. Looking back at FY2023, the company reported total revenue of 36.35 crores, EBITDA of 30.04 crores, and a net profit of 10.67 crores. Our remarkable 3-year CAGR reveals a remarkable growth trajectory, revenue of 62%, EBITDA of 77%, and PAT of 99%. We successfully listed on the BSE SME platform in October 2022. To sum it up, we currently serve more than 1,000 clients, including industry giants across various sectors, with a presence in over 250 locations spanning 16 states and 3 union territories in India. We have deployed over 30,000 tech assets to drive their success. Now, let's delve into the financial highlights of H1 FY24. In the first half of the fiscal year 2024, Silicon Rental Solutions Limited demonstrated substantial growth with total revenues reaching 25.06 crores, marking an impressive year-on-year increase of 42.47 from H1 FY23. The company's EBITDA also showed a robust performance, reaching 18.81 crores, reflecting a notable 29.47% increase compared to the same period in the previous year. The net profit for H1 FY24 stood at 7.13 crores, exhibiting a substantial growth of 31.45% when compared to H1 FY23. The EBITDA margin stood at 75.07%, while the net profit margin stood at 28.44%, highlighting strong profitability. The depreciation amounted to 9.53 crores, which is one of the major non-cash expenses. The company also generated a healthy operating cash flow of 12.89 crores, reinforcing its financial stability and ability to sustain positive growth. Now, I would like to end my part and hand this over to Mr. Kaushal. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for the moment while the question queue assembles.
Nikhil, want to come here?
The first question is from the line of Rahil Dasani from Mittal Analytics. Please go ahead.
Yeah, hello, am I audible?
Yes. Hello.
Okay. So good afternoon, sir. I have a few questions. So first of all, according to your last phone call, I know this was an example, but how do you do the logistics for 900 while other companies may do it for 2500? And secondly, as your scale grows, would you be able to maintain this level of cost, or as you spread geographically, this would be impacted?
Could you repeat the first half of your question again, please?
How do you do the logistics for 900 rupees while other companies may do it for 2500?
We don't do it at 100 rupees, yeah, but we do it 900. Oh, see, with the...
No, 900.
Yeah, 900 is fine. So basically, we have a huge, we have tie-ups with all the big major logistics companies, and because of, the quantity is so huge, we can have a tie-up with them for a year. So we tie up with them for a long term, and with this kind of quantity, we get the best rates. So our commitment is huge, and that is why we get these kind of prices.
Okay, and are these costs sustainable? Like, if you spread geographically, would these costs remain the same?
Basically what happens, today we've reached a position where we have, 100 engineers, and say we have 30,000 machines deployed. And the mathematics goes that the moment you start increasing your base, where you reach to 50,000 machines, your expenses don't go up exponentially. So we'll definitely be able to maintain these kind of profits, though we might not be showing a 100% jump and 50% jump, but our PAT and this thing will be very much in a good range as compared to most of the companies in the market today.
Okay, got it. My second question is, what is stopping...
One question per... Okay, go ahead.
Okay, so what is stopping new competitors from entering this space? Like, what are the entry barriers in your opinion? According to your last phone call, there was a logistic management issue which the new competitors must have faced. But now since the work from home is taking a halt, so what's your opinion on this?
See, today if you see the, everybody, the mindset is such that nobody wants to own assets. And especially with these kind of depreciating assets, where you need huge backup, support, service. It really is not easy to, manage all these things. So a client would definitely look at a solution where he gets the product which is taken care of in every terms, including logistics, including service, including upgrade and exchange. So we have all those options which a client would love to have. And nobody wants to go into a capex mode. That is one. And as far as competition is concerned, I think there's competition everywhere. But with our business, where the investment is so high, I don't think it's very easy for anybody to get into this business and the scale which we're doing it at. So it won't be as easy. I mean, you can easily get into reselling a product. But if you have to rent it out, you have to invest from your side. And I'm not talking about one, two, I'm talking about thousands of numbers. So you're looking at crores of investment and your money is going to come to you in a period of time. So that is something which is not so simple and it's not so easy for everybody to, jump into.
Okay, got it. I have a few more questions. I'll get back in the queue.
Yeah, please. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Chinmay Rane from Cogent Finvest. Please go ahead.
Yeah. Good on, sir. I just want to understand your business model, how scalable it is, and what is the approach the company takes to get an order?
Could you repeat that again? Could you speak louder, please?
Yeah, sure. What I'm asking is, just want to understand your business model, like how scalable our business model is, and what is the approach to bag an order for any corporate or any institution?
It's definitely a very scalable model. Investment is high, but then we are listed and we have good banks with us where we find our source of money is pretty much, taken care of. And we have all the options ready with us. So the moment we scale up, we have the finances in place. That will be a big advantage to us. And the way we are going, it shouldn't be a challenge. And definitely it's a scalable model and we can definitely grow to a very, very large extent.
Yeah. And so what is the process generally we follow to bag an order? Like how the business is generated?
How the business is?
Generated.
Oh, that's our normal marketing process. No? We have in-house digital marketing people. We have on-field marketing guys, sales guys who are on the field all the time, and not to forget the references that we get because of our good work and good service that we are doing. So all those things help in our expansion and our orders,
Okay. So it means that there is a huge requirement of a working capital, to source the peripherals and then to supply, right, sir?
Yes.
And then what is the time period generally you recover back your investment, in the sense you receive the money from your clients?
See, that varies actually. There are a lot of working to it, the service required, the logistics, everything. And the product that we're giving. So that there's no fixed thing which I can tell you that we recover the cost in X number of months. So there's no fixed this thing to it. But we have our working where we work on all the costing, the product, the life of the product, the service required, and logistics required, and everything. So all those things there's a lot of calculation to it. It's not so simple.
So can we safely assume that your working capital cycle would be around 6 months, 6 to 8 months?
No way. That's not possible, right? In such a short time to recover the cost of the product and everything. Not possible.
So then what is your working capital cycle, sir?
It'll be different for different products. So that I won't be able to tell you as of now.
Okay. And if you consider
ma'am, may you request to return to the question queue for the follow-up questions?
No problem. I'll come back in a few. Thank you so much.
Thank you so much. The next question is from the line of Gunit Singh from CCIPL. Please go ahead.
Hi, sir. Thank you for this opportunity. So I'm new to the business. I just would like to understand, how things work. So, what kind of contracts do we have with our clients? So, do they pay us monthly or do we have an annual contract for, and what is the realization example per laptop right, to our customer? I would like to understand, what is our investment, say, for example, if we are talking about laptops. So what is an investment in a single laptop for us? What is the cost? And what kind of revenues and EBITDA do we generate per laptop?
I think we've given everything on this thing. So all these, I think, and I've answered the question anyway. So anyway,
Hello?
sorry, I think got disconnected. Hello?
Yes, sir. Are you answering the question?
Mr. Gohit Singh, can you repeat the question once again?
Yes, sir. So I just want to understand the unit economics basically of how this works. So, for example,
It's a simple rental this thing where we have a product which will cost X, whatever, 30,000. We have a service cost to it. We have a logistics cost to it. We have an interest cost to it. So all those things are added and we take care of everything and we give a turnkey kind of this thing to every client. And that's how it works. So basically we are taking care of all the headaches, right from investment to service to logistics, and we give them a complete package.
So, what kind of a price differential is it for them? As for example, against purchasing a laptop or renting it out from us.
See, you might look from your window where you're an individual. See, when a company is looking at 1,000 laptops.
From a company's perspective, yeah.
I'm just giving an idea. That's what I'm just telling you. So basically, when you're looking at 1,000 laptops, you have to invest around 5 CR or so. So when you're when you go to invest 5 to 7 CR and you're going to pay an interest on it, and a depreciating asset where you'll for 1,000 machines probably you'll need at least 7-8 engineers and upgrade cost. All those things are there. So when I have to invest that kind of money, where I have to keep a team of engineers to maintain those, in addition maintaining the the details of the assets, the locations, is that. So when you add all these things, it becomes quite a headache.
Correct.
So when a company is given a package where they just have to pay a monthly installment of X amount, and I take care of everything, so then it becomes one headache which is off their head. They are basically just outsourcing it. It's like any other business, where if I'm paying an X amount extra also, and my department is taken care of, I would prefer to do that rather than investing and taking over all those headaches on my head. So that is why it becomes a complete package for a company where everything we take care of. Not to forget pilferage, so for companies where if they have 10,000 machines, they cannot keep track how many hard disks are going bad or how many RAMs are going bad or how many things are missing.
Yes.
You get that. And we are taking a X amount every month. That's it. Whatever goes bad, whatever is faulty, whatever has to be replaced, upgraded is totally our headache. Not to forget our logistic costs and all these things which are much, much cheaper as compared to what when individual company goes and, starts negotiating with those vendors, So overall, if you see, it's not going to be a very costly proposition, but it'll definitely be a workable thing for everybody because they have to just give a rental amount every month. That's it. Everything else is taken care of.
Correct. I get an idea on an annualized basis. So, for example, if they take a 1-year contract, as against investing 5 CR, how much are they saving on that? And also, do they have any clause of, say, replacing the laptop? So, if the contract is for 3 years, so, are there any clauses in build which say that every 12 months or every 18 months, you replace this laptop with a newer machine? That is one question.
That
And
again depends from company to company. That doesn't happen. There's no such thing as, written in advance. It's normally a 1 year or 3 year contract, and we can always review it over the time, and we have all those options in place. If there's a specific requirement and they, in spite of being in a contract for 36 months, they want to change to a better laptop, even those options are available with us. So that is a very big advantage to these clients.
all right, got it. And sir, what is our, outlook for FY24 in terms of top line and bottom line, since we are a fast-growing company? And what kind of growth do we expect for FY25 and in the coming, say, next 1 or 2 years?
Yeah, I think you should go and check our last few years' performance, and we've been growing at 30-40% on a regular basis. So I think we are going to maintain that.
All right, 30-40% CAGR for the next 4-5 years.
Yeah.
All right. Wish you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Pratik Chaudhary from Samartha Capital. Please go ahead.
In your income statement, you made some purchase of stock in trade worth around 3 or 4 crores. What is this regarding?
So we got an opportunity to do some trading, which normally we don't do, but we are mainly into rental. But that is also a part of our business, which we have always been into. So we got an opportunity to execute a existing client order, which they wanted to purchase. So that is what that was a trading business that we did.
Trading business. Okay. And what sort of margins do you typically earn on such business?
Anywhere from 10 to 15%, depending on the product.
Okay. Okay. And do you expect such revenues to persist in forthcoming quarters?
Like I said, we don't get into those businesses because we prefer to be in our space, which is rental. But then if our client, who is our existing client and who's looking at something like this, we wouldn't like to say no to them. So that is the reason that we, do honor such specific requirements,
Right. And what are your capex plans for FY24 and 25?
I think that's as per orders. Because it totally depends on the orders that are there. And we have enough capacity to expand exponentially also. So we have our, all our workings in place, and we can have any kind of investment, even up to 100 plus crore.
This is per year you're talking about?
Yes.
So are you envisaging such numbers or closer to such numbers to take place maybe in the next 1 or 2 years?
Yes, definitely.
Because up until now, we've been doing around 25 to 30 crores capex per year. And this half year also we did around 16 crore.
Yeah, so it's gone to 32 crores. So I like you said, for 2 years, 100 crores is not a big deal. We could definitely do that.
Okay. Is that a definitive plan you guys are working on, or that's your sort of aspiration?
It's not aspiration. We are in talks with a lot of companies. We are giving them options. So there are many things that we are looking at. Adding new verticals, adding new ideas. We are not sticking only to basic IT. We are looking at a lot of avenues, and we are looking at a lot of other, verticals where we can definitely grow to that number.
You could be looking at spending around 100 crores in the next 2 years.
Yes.
Okay. And what sort of asset turns would you generate on this investment, roughly?
Similar 30% kind of thing.
How much?
25 to 30%.
That's the asset turn currently as well for your...
Yeah.
I'm asking that if you spend 100 crore on 100 crore worth of equipment, how much would it be able to generate in revenues per annum on full utilization?
Like I said, 25% of it, 25 to 30% in a year.
Okay, fine. Okay. Thanks a lot. I'll get back in the queue.
Sure.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask questions. The next question is from the line of Anand Patel. Please go ahead.
Hello. So I want to understand regarding the insurance policy. I mean, we have assets worth of 70 to 80 crores, but I see only 55,000 rupees spent on insurance last financial year, which is 22-23. So suppose any incident happens like a fire or earthquake or anything that can damage our asset, are our customers responsible for such damages?
Yeah, because see, the product is in their premises, so it is definitely covered by them. So that normally is the case. And we normally don't have a huge quantity lying with us,
Okay.
That is why we don't get into the insurance. Normally the clients take care of the insurance from their side.
Okay, so any kind of asset which is damaged, they will give us money for that because that is our asset.
Yes.
If their insurance claim is cleared.
Yes.
Okay.
No, whether it's cleared or no, client takes care of it.
Okay. And do we collaborate with other companies for service upgrading or like networking?
Yes, we do because we cannot, because we have so many cities to take care of. It will not be possible to have so many engineers in so many locations. So we have tie-ups, yes.
Okay, just a follow-up question on this service part. Do we serve our customers only those who have assets of more than 1 crore or like more than 100 assets? Is it any kind of criteria like that?
Yeah, see, basically we give service only to people who have taken equipment from us. No? So it's whether it's...
but it's like minimum 100 plus equipment or minimum 1 crore.
Yeah, we try to maintain minimum 50 machines kind of criteria.
So if someone took 25 laptops on rent, so you won't provide them service?
No, we will. Not that we'll not provide, we'll not supply them only. See, if we supply, we have to give service. So that is our motto, if we are supplying whether 1 piece or 10 piece, we have to give service. But if we are not supplying to them, then we are not liable to give them service. No? So if it is less than 25 machines, I might not supply them. So if we don't supply, we'll not give service. And if we supply 1 piece also, we'll give service. That is how it is.
Okay. So I will be in the queue for more questions. Thank you.
Thank you. The next question is from the line of Abhishek Sharda. Please go ahead.
Yeah, hello, sir. My first question is regarding the growth guidance that you gave last time for FY24 is around 40 to 50%. So do we stick with this guidance?
Yeah.
And sir, for FY25?
Similar kind of a growth.
Similar. Sir, in the starting con call, we said that our growth would be around 50 to 80%, minimum of 50%. So basically we are cutting our guidance.
No such thing. I mean, we never said 50 to 80%. That's stupendous. I mean, we're beyond. We've never mentioned.
First con call you mentioned, I think 50 to 80% and minimum side 50%. I mean, I read from your transcript only.
I don't think so. We've always maintained 40% kind of a thing, plus or minus 5%. So yeah, I mean that's what we normally.
40 to 45% may be a mistake from my side.
Yeah.
And so the other question is like recently you got an order of around 250 laptops.
Yeah.
So basically, what kind of incremental revenue we get from this order in the top line?
It'll be around 7 to 8 lakh per month.
7 to 8 lakh.
It's a monthly this thing, no?
Okay. Yes, sir. So 7 to 8 lakh per month for around 4 to 5 years. The useful life, if you assume useful life for 4 to 5 years.
Yes, you can do that.
So is that understanding correct?
Yes.
Okay. And sir, any margin guidance? Like you said that like PAT margin, you have given the PAT margin guidance of around 30%. So we stick to that guidance only?
Yes.
Okay, fine. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Dhyanam Shah. Please go ahead.
Hello. Hello.
Hello.
Am I audible?
Yes, tell me.
Yeah. So we have achieved a remarkable EBITDA margin of 77%, right?
Yeah.
So what is the specific factor that contribute to such a high margin?
It's everything. No? It's our product. It's because how we maintain our products, how we increase their life, so our products can last longer. The longer they last, the better the revenue, and how we keep our expenses in check. So everything is responsible for this.
Okay.
And like I said, even previously, like I said, if we have say 30,000 machines and we have expenses of say 10 lakhs. If I move from 30,000 to 60,000 machines, also my 10 lakhs will just go to around 12 to 13 lakhs. So that all these things, as we grow, keep helping us in maintaining our profits and keeping our EBITDA and PAT high.
Okay, understood. And now one more. So what are the strategies for next half of the financial year? So any strategies we have made?
Yeah, we are continuously doing a lot of things. Actually, I cannot divulge many things, but then we are adding new verticals. We are expanding in different states. We are opening our offices there. We have new products coming in, so lot of things happening at the back end. So, I can assure you our growth will be as good as it has been, and it might become better with time,
Okay.
See, okay, yeah, I think that should be.
Okay, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Chinmay Rane from Cogent Finvest. Please go ahead.
Yeah, most of my questions have been answered. So just wanted to understand how our AMC works after providing the peripherals. What kind of how our AMC is been arranged for the customers.
See, it's like a normal AMC, na? We have our own ticketing system where client places a call and our engineer goes and attends. So we have our engineers all over, and we have a maximum turnaround. 24 hours. We resolve the issues, and again, like I said, because we are pan India, we have offices in some places. Some places we have tie-ups. And we ensure that our maximum 24, 48 hours our resolution is taken and the product is up and running.
Sir, I just want to understand, suppose you have 50 or 100 peripherals in order. So what is the quantum of that AMC? In terms of the money, how is the AMC charges? Is it a particular percentage of the total order, or it is a fixed amount for the 50 peripherals? How will it work?
No, there is no mathematics for this, madam.
Okay. And you said that logistic cost is the major cost, I believe. So what is the percentage of it to the sales revenue?
Of what cost? The logistic?
Yeah.
My maximum 2-3%.
Okay. So that is not a major cost for you.
Right.
Okay. And so when you have a tie-up for the services you provided pan India, so what kind of a remuneration, how the remuneration or how the fees are paid to them? Is it a particular percentage to them, or how it is?
It depends. If it's normally a call basis, because like I said, most of the places we'll have our offices or we'll have our engineers there. Mm-hmm. And a little tier 2, tier 3 cities where the calls are not too many, it will be per call basis. So it's just per call.
It's a per call. So then what would be our major cost component?
Major cost is investment.
Okay, so that is a capital investment.
Yeah.
Okay. Okay, sir. That's it from my side. Thank you so much.
Thank you. The next question is from the line of Gunit Singh from CCIPL. Please go ahead.
Thank you, sir, for the follow-up. So, are we planning to raise any debt for our future CapEx plans, or I mean, would all this be from internal accruals?
No, from internal.
All right. So we would be planning to remain, I mean, almost debt-free in future as well.
Yes.
All right. Great. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Anand Patel. Please go ahead.
So as per last presentation and last phone call, company wanted to enter some new segment or some asset-light business to improve net margin. Any update on the same?
We have started, but not on a full-fledged basis. And we are still tying up with a few. But this year we should be giving a good news about those also.
So what kind of business that will be?
Similar lines.
Similar line, but just products are different.
Yeah.
And are we planning for any kind of refurbishment or some networking? We do not just provide the assets.
Again, what is that?
So are we planning any kind of refurbish business or networking, not only supply assets, but do networking for the companies also?
But we are already doing that. So we take turnkey projects. We do complete networking, firewall, everything. So we were always into everything, into servers. We were not into only box selling. We were always into complete setup, networking, CCTVs, firewalls, everything.
So those installment or networking are ended up in this monthly rental?
Yes.
Okay, so no different charge for that?
No.
Okay. I see long-term debt of 8 crore on the balance sheet, this H1, but finance cost is only 3.5 lakhs. So what is that?
No, that's 8 crores. Which one are you talking about? 8 crores we had paid off with our IPO funds. So I don't think they'll be showing in the current balance sheet.
No, it's showing in September 23 is 8 crore of long-term borrowing.
How much? 8 crores?
8.72 CR, yes?
No.
Please go through the result, please.
Yeah, I'll do that. Don't worry. I'll send you the...
Can you bifurcate clients based on the contract period? I mean, how many less than 6 months, 6 to 1 year, more than 1 year?
Our model is more for people who are, I'll say at least 60 to 70% are long-term.
Long-term and more than 1 year? Or 1 year?
More than 2 years rather.
More than 2 years. And Maharashtra is how much percentage of the top line?
What is that?
Maharashtra. We were mainly focused in Maharashtra previously.
Yes. Maharashtra will be around 60% odd.
60%. And can I ask the last question? One?
Tell me.
So I don't see much inventory on the book. So whatever asset we buy, it goes into the asset part of the book. Okay. So usually how much percentage of the assets are given on rent at a particular time, and how much percentage of the assets we keep for backup?
I think 95% will be there, and maximum 5% as backup probably.
Okay. So we place orders for these assets only when we get like commitment from the customer?
Yes. Always.
Okay. Thank you.
Thank you.
Thank you. As there are no further questions from the participant, I now hand the conference over to Mr. Kaushal Shinde from Kirin Advisors for closing comments.
Thanks everyone for joining the conference call of Silicon Rental Solutions Limited. If you have any queries, you can write us at info@kirinadvisors.com. Once more, thank you everyone for joining the conference.
Thank you everyone.
On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.